Good morning, everyone. Welcome to day 2 of AI Showbiz Summit 4.0. We are ready and raring to go, and what a kickoff we have. With us live here in the Zoom room studio is SANDIP BHAGAT, Chief Investment Officer of Whittier Trust. Before I hand it off to Sandeep, just a quick shout out from yesterday. It was off the hook. I want to go over some of the highlights. Alex Lightman was in the house. Wow, he always has something to say about Hollywood we haven't heard anywhere else. Robert Jacobson launched a new space book about the new space trillion-dollar economy. We had Lisa Rich and an investment in space panel that was truly out of this world. Some other highlights was Mariana Acuna Costa was with us, and Rebecca Krophammer. And of course, the wise guy himself, Guy Kawasaki. The day turned into something really exciting with the end of the day panels. Yannicka was there moderating, Wes Potter, who's with Digital Monarch Division of Unity, and Habib, and Chloe Gu was there with us as well, who works closely with China. And then Sandra Ponce de Leon did an epic panel on AI in oceans, and she's back again today for her Latina X panel. And then a spectacular party was had, wasn't it? And Yannicka was dressed for the Norwegian Olympics. She wins the prize for the most original costume of the night. I was Princess Leia, and Sandra was back emceeing as a space goddess. It was really something. We had performances, comedians. I laughed so hard. Lackham was in the house with us, and then we had a whole host of singers, including Rob Kramer with his new, I call it a rock opera about AI that I can't wait for it to hit Broadway. It was amazing. My favorite song was played To Me Predictable by Dave Munter. And then that wasn't it, was it, Yannicka? We just kept going from there. We had live from Mongolia and Chicago, Mars V, that blew our minds with the future of what is going to be happening with our epic journey to get to Mars. And the nightcap of the night was John Canning, who an executive with Digital Domain, who brought us through the perspective of content creation, where it's been, what's happening, and where it's headed. So with all of that, Yannicka, take it away.
Hi, everyone. So I want to introduce you to my dear friend, Sandeep. He's a Chief Investment Officer at Whittier Trust. I think his view and his expertise when it comes to investment strategies are really important right now for us who work in AI and emerging tech, and especially tech for good, is we really do need to understand the market and the global economy. Sandeep is an expert who BBC calls and CNBC call and Bloomberg call to really simplify the complex investment scene. So Sandeep, can I please give it to you? And your background is also a chemical engineer, so you do have in-depth understanding of technology. So without really explaining your background too much, can you please explain to us what exactly is going on at the moment, and what you see happening in the future post-pandemic? Is there a post-pandemic?
Yes, the good news is there is life after this current crisis. So it would be no exaggeration to say that we live in not just interesting times, these are truly unprecedented. The coronavirus pandemic has swept through the globe in ways that few would have predicted. It has infected over 3 million people in over 200 different countries. Along the way, it has brought along significant human pain and suffering. It has delivered the biggest economic shock that we have ever seen in the past, and it has unleashed unprecedented volatility in the markets. But there is good news. There has been welcome relief in the last 6 months on so many different fronts. Stock prices have rebounded, volatility has subsided, policy responses have been timely and aggressive, and the progress on the medical front is almost breathtakingly swift. So where does that leave us right now? Are we in a recession, or has the recovery already started? Will the policy measures offset the damage that is unfolding from the current recession? What about on the medical front? How soon will we have a vaccine? How soon will we get back to life as we knew it from 3 months ago? And what about the long term? The coronavirus pandemic has changed our habits in recent weeks. It has scarred our psyche. To what extent will we carry these memories and experiences going forward? And how different will this post pandemic world look like? So, in the next few minutes, we will answer these questions. And in order to do that, I want to begin first by looking at the damage that has been inflicted on the global economy. And I'm going to begin by looking here at the US through a metric called the Purchasing Managers Index. What is this index? It's simply a survey of forward looking views from purchasing managers across different industries. And what could this index tell us? It's simply a gauge of economic activity. A PMI level of 50 or above shows expansion. During a recession, this gauge falls below 45, at least in the US. You can see here that we are already in big trouble, right? We have fallen off the cliff. We're well below that threshold level for a standard or normal recession. Manufacturing stands at 36, services at 27. Remember, the US economy is dominated by the consumers, so the decline in services is particularly alarming. It's happening all over the world. In fact, it is worse in Europe. In Europe, you have the manufacturing PMI at 33. The service sector, the services PMI, is at a scarcely believable level of 12. Now, trade is a bigger part of the European economy, so these two sectors are better balanced, but the combination, the adverse effect here is still undeniable. And so, coming back to the US, it comes as no surprise that this economic malaise has now started to take its toll on the employment front. On the left, you see here that the previous peak in US unemployment claims was just around 700,000. We saw that during the global financial crisis, and we have far exceeded that number during the pandemic. In fact, weekly unemployment claims reached a peak of just about 7 million. That's an order of magnitude different than the previous high. That was 5 weeks ago. In the last 6 weeks, 30 million Americans have lost their jobs. You would think that economic devastation of this nature would open up the worst possible scenarios for the economy moving forward. And that is actually true. All of these possibilities, when we think about what happens to the recovery in the world past the pandemic, all of these possibilities were reasonably likely back in mid-March. And I kind of smile and chuckle because they are represented here through this interesting mix of alphabets, signs, and symbols. So starting at the top, here is a scenario that is actually quite unlikely right now. The I, or the L-shaped economic recovery, simply means I suggests that the markets are going straight down. L means that the recovery will take forever to materialize. This would be something like the Great Depression, but something that is actually quite unlikely at this point. There are three somewhat less likely scenarios as we see it. You have the U-shaped recovery with a long period of stagnation at the bottom. Unlikely in our mind because there is good news on the medical front and economies are starting to reopen. The V-shaped recovery, a sharp V that says economic activity will snap back to where it was pre-virus level in as little as a few months, we also think is equally unlikely, right? Because the reopening will be difficult. We're still dealing with the economic fallout from the recession. So possible, maybe less likely. And then there is the square root recovery, right? It's an extension of the V shape. But again, that quick initial snapback and then a secular stagnation seems unlikely. That leaves us with some more likely scenarios for the market. You may end up with an asymmetric W, where a temporary setback or misstep in the current recession will push prices lower, not all the way down to to the previous lows, but still a little bit of choppy action in the markets. For the economy itself, the check mark or the smoother Nike swoosh seem like likely outcomes. In other words, economic activity will pick up, but it just won't be at the same speed as the decline was. It'll be a more gradual recovery. What are the markets telling us in terms of the likelihood? Well, here is the S&P 500 index. And by the way, thinking back about those shapes, there is no L or U here. It doesn't appear to the naked eye, but all of the other possibilities are still on the table. And I will just point out that while we may have ruled out the worst possible scenarios, there is still a wide range of outcomes ahead of us. Now, of course, the eventual impact of coronavirus will depend on what happens on the economic and the medical fronts. So let's take a quick look at where things stand and how we have reached this stage. So first, we start with monetary policy. That begins with the Fed here in the US. And you can see how remarkable the Fed actions have been. On the left, you see that it took them one short week to take interest rates all the way down to zero. The Fed has supplied unprecedented amounts of liquidities that has not only ensured the smooth functioning of the markets, but it has also brought lending to small businesses in the real economy. They've done this after rates reach zero through a conventional tool with one big difference. They engage in quantitative easing. Is the feedback from me, or I'll keep going? The, the quantitative program is simply referring to the purchase of assets. And the big difference this time around is that this program, the Fed has said, will be unlimited in its scope. The Fed will do whatever it takes. They have promised to be aggressive, proactive, and act on a timely basis. So on the right, their balance sheet, you can see, has grown in size by $2.5 trillion from around 4 to 6.5, but on its way to 8 to 10 trillion. Now, the Fed in this go around had a handy playbook that was already developed during the global financial crisis. But in many ways, they've even exceeded the scope of what happened during the previous crisis. So I'm just going to compare and contrast their actions through these two time periods. So just like back then, this time around, they cut rates to zero. They created lending facilities for primary dealers, for commercial paper, money market funds, asset-backed securities. Unlike the last time, this time around, their asset purchases have extended to corporate and municipal bonds, and their lending facilities to small businesses, again, on Main Street. Back then, they did 1.3 trillion of QE in the first 3 months. They far exceeded that in the first month here. And to extend that analogy, in the first year, they estimate they will do 5 trillion in QE. By contrast, during the global financial crisis, they did 4 trillion over 6 years. So the Fed actions have been dramatic, and that gives us hope looking ahead. And the Fed has not been alone. This phenomenon has played out all over the world. Central banks outside the US have also engaged in quantitative easing and asset purchase programs, this time to the tune of over $2.5 trillion. They have also cut rates. You can see that here. Rates have fallen by well over 100 basis points through rate cuts of over 150 made by different central banks. So this was on the monetary side. What have governments done? Very quickly, I will point out that here is a snapshot. It's really busy, so just hear the sound bites. Don't need to read this in detail. But the biggest fiscal stimulus package and program came out of the US. It was announced about a month ago and sized at 2.3 trillion. It was 11% of GDP, and it really had something for everyone affected by this crisis. There were one-time stimulus checks for individuals. There were enhanced unemployment benefits, loans to distressed businesses, small business relief, direct aid to state governments, health related spending. And again, the US hasn't been alone. In fact, Germany has an even bigger fiscal stimulus program. Their uh, attempt to spur spending through deficit amounts to 20% of their GDP, which is actually larger than the US in percentage terms. The US stimulus programs have now approached $3 trillion. So let me quickly talk about the medical front because what happens here dictates our future going forward. So where would I begin? Uh, I'm going to read this actually backwards from right to left because the biggest medical breakthrough that we can think about would have to be in the form of a new vaccine. And here the progress is mind boggling. There are now over 85 coronavirus vaccines under development globally. 12 of them are in human trials. There are 72 antiviral antibody treatments under development. The most promising of these on the antiviral fronts, by the way, suppress the replication of the virus inside the body. This comes from Sciences, whose a drug in this space, remdesivir, has already been approved by the FDA. Antibodies, drugs and therapies, on the other hand, actually directly fight the infection. And again, here, the company that actually produced antibody drugs for Ebola and MERS, Regeneron, is scheduling human trials this summer. And just last night, Dutch scientists announced that they have an antibody drug that can defeat the virus in a lab in cell cultures. And then, of course, you have diagnostics, which actually, given the setting of this summit, is a classic AI problem. You test, you track, you isolate, and you can actually predict the location of the next outbreak and control the size. So, where does this all evolve? Now, look, I'm no medical doctor, right? So I have no business expressing a view on the topic, but I will. And that's because I'm an eternal optimist. So I am so bullish on human ingenuity, creativity, innovation. I'm optimistic that the human race will also conquer this challenge. To me, it's not a question of if, it is a question of when. So, how do you summarize all this? Where are we? The current backdrop is a little bit like a seesaw. On one hand, you have these developments and this progress on the policy front and on the medical front. On the other hand, you still have to deal with the fallout from the recession that is already underway and any unanticipated knock on effects that it might produce. So that's the here and the now. Let's shift gears and look to the future. And it's easy to imagine that the experiences of the last few weeks will have a distinct effect on different industries. So where should we begin? Look, staying at home and working from home for this long has been difficult, but it also reminded us about the benefits of not getting stuck in traffic, avoiding delays, and having nothing to do with congested roads and highways. So looking ahead, working remotely may be not just a viable option, but a desirable option to working in an office. Social distancing could become a subconscious part of our mindset going forward. Think about the future that it implies for different industries in travel, leisure, entertainment. Think restaurants, hotels, gyms, casinos, cruises, movie theaters, uh, theme parks, uh, big significant implications here. Business air travel is likely
Two
to get,
minutes till Q&A. Thank you.
yep. Air travel is likely to be affected at two levels: public health safety considerations related to social distancing, and just the convenience of video conferencing may well suggest that in-person business meetings are not as compelling, necessary, or even required. So these are intuitive. We can come up with many more examples. I've been given a time warning. So let me close out my discussion by looking at some more profound issues that could play out over the longer term. And I'm going to start with globalization first. So the worldwide integration of goods, services, people, capital has produced significant benefits. There is no denying it. And what companies counted on in their pursuit of the lowest cost of production, wherever they could find it in the world, was a reliance on open borders. And we know that global supply chains can get affected and disrupted from closed borders, travel bans, and export restrictions. The shortage in critical medical supplies was the biggest example of this type of an overdependence. So, if this means that companies now prefer resilience, reliability in their supply chains, not the lowest cost, that has implications for profitability and therefore for valuations. Massive stimulus has increased debt levels for developed economies. How sustainable is it? When will it unleash inflation? Simple questions in the time I have, virtually impossible to answer. I'll leave you with two quick thoughts. Don't fret about this in the near term. Is the massive stimulus needed right now? Of course it is, from both a humanitarian point of view and to stave off economic devastation. What about inflation? We're worried about deflation right now. We have rising unemployment, precautionary savings. So these will become issues down the line. But moving to some timeless themes, we know we have concepts of portfolio diversification. Well, that can address these risks. A well-diversified portfolio can balance inflation risks by allocating to smaller companies or more cyclical stocks. I'll leave you with two final useful takeaways. Stocks should outperform bonds in the coming decade. Central bank intervention has distorted bond prices. Bonds are overvalued, stocks are not. US stocks in particular may benefit uniquely from recent reforms that it has made on trade and deregulation. And finally, investing in high quality companies will never go out of style. It will stand the test of time, even in a new normal. High quality companies have stronger balance sheets, are likely to produce stronger earnings growth, have more stable and enduring valuations. So I think I packed most of what I wanted to say. I hope I stuck to my time limit.
That was very impressive, Sandeep. Thank you so much. I do want to introduce you to everybody as one of our judges for the May Day Impact Award Pitch Fest. I have included you as a judge because of your expertise in investment, but also because I do know you invest in technology and cutting edge technology. And also you do work a lot with philanthropy as well. I actually have a very interesting question that just came in. The question came in through Facebook and it says, I have a tech company running out of first round funding. What do I do?
So my first observation is a note of encouragement. Don't despair. We're on the cusp of a new economy that will be characterized by everything that you guys do on a daily basis: big data, machine learning, artificial intelligence. And in a post-pandemic world where the world was caught unawares and taken by surprise with a exogenous risk factor shock, AI was precisely the tool. Had we been a little better prepared to track and then predict the next outbreak. So that's one simple example, but there is so much disruption ready to happen that you guys are in the perfect spot. In terms of the value proposition for your own company, focus on a differentiated approach. We don't get carried away with just the financial or the business projections when we think of ideas. It is, what is it about your concept that is different? What are the skills that you possess to execute on that differentiation? So do some of those things, and funding, while hard at this point because everybody has been hurt by the recession, should start flowing again. So
many of us who work in the tech industry, we also invest in the stock market. So I have another question for you here. It says, are we out of the woods yet? Is it now time to take on more risk to earn higher returns?
So that's a temptation, which I just want to sound a word of caution on. In other words, if we liked the stock market in January, when the S&P 500 was near 3,400, and it's since then dropped to 2,200 and it's sitting at 28. If you liked it then, you should love it here, right? It's lower, you can get a bargain. But there is one big difference. The recession is going to change the outlook for future growth and valuations as a result. And so there is still, we have been lulled perhaps into a sense of complacency by the strength of the rebound in the stock market. Just be aware that there is still a wide range of future outcomes. And so discretion may be the better part of valor or courage here. You have the avenue of investing in high quality companies. So just think of Amazon and Microsoft here in the US, companies that were going to benefit in the long run because they had a secular tailwind. Somehow the pandemic makes them even stronger because everybody wants e-delivery and everybody wants cloud computing and remote work options. So maybe better to be safe in the near term until the medical issues resolve themselves.
I have another question from Facebook here, and it says that now that we can all sort of relate on the same level across the globe, I'm paraphrasing because it was a long question, will we see user trends shifting the market towards a more holistic market?
Okay, that's philosophical and profound. The concept of holistic could mean different things to different people. At one level, if you thought of globalization or thinking of the entire globe as one integrated ecosystem, I'm afraid this experience is going to splinter that. It's going to result in populism, nationalism, and less international dependence. Will we all begin to think of prioritizing across not just economic needs, but social needs, national security, stability of the healthcare system and medical supply chains? Yes. So I think that is going to bring people together from different disciplines. So I think that's a driver that adds to the holistic outcome. So I'll leave my comments at that. Like a good politician, I gave you on one hand and on the other hand. So.
Sandeep, I want to thank you. That was amazing. We're going to just give you a big round of applause. Yannicka, great job moderating.